thank you once again, everybody, for joining. Let's hear what Sean has to say. Welcome, Sean. Thank you for joining us.
Brilliant. Thanks, Jordan. Thanks once again for the opportunity. Always love doing things like this. Charting and trading is an absolute passion for me at the moment, and I love teaching people. So I'm going to try and get through as much as I can in the hour. So basically what I want to start off with is what my charting process is, and hopefully you guys can learn from the way that I chart my levels. So normally I start on a blank chart. So I look for levels. I look for my monthly, my weekly, and daily. I'm going to show you how I find that. Then I go and look for value areas, and I normally pull a fixed range for that. I look at what the value area high is, the POC, and I'm going to explain that when we get there, and the value area low and what the significance of that is. I then go and pull fibs on my chart to see where the possible reversal levels are going to be. I then look at market structure, because obviously market structure is really, really important in terms of your trading process. In terms of bullishness, in terms of bearishness, if the market is making lower lows and so on, you know that the trend is down. If it's making higher highs, you know that the trend is up and so on. And then I go and look for chart patterns. And using all of these things, I try and find some kind of confluence, because using just levels, just value areas, just fibs, just market structure and chart patterns doesn't work for me. I find trying to find a kind of confluence with all of these levels is what really works for me. Then I'm going to go into open interest, a little bit of volume. I'm going to explain what open interest is, how to read it. And what I'll do is I'll make this little document available for you guys because I'm literally just going to explain it. You guys are going to have to take your time and look at the open interest, look at the charts, see what happens when open interest increases and the price is increasing. See what happens when open interest is decreasing and the price is increasing, so that you can get an understanding of what is happening. And I've got a little cheat sheet there for you as well. Then I'm going to get into TPO and order flow. TPO stands for time, price, and opportunity. And most of you might not have seen these kind of candles before, but really it is a revelation. So as I said, I'll get absolutely as far as I can. So let's start out on a chart. Any takers for a clean chart? I can, if you guys want, I can start on a Bitcoin chart and work my way from there. Or if you've got a specific coin you want me to do my charting process on, just give me a shout. Anybody? Nobody? Okay.
Also,
so I'm going to take
the consensus is Bitcoin. I see Victor says Bitcoin, Davy Jones says Bitcoin, Raj says Bitcoin, Des says Bitcoin. There are a couple options for ETH, but I think it makes sense at this point to focus on Bitcoin.
Let me do Bitcoin, because I mean, the thing is that Bitcoin is is really the big daddy of everything, and what Bitcoin does, the altcoins are following. And obviously the markets, all the markets at the moment are really at a low point. If you look at all of these are my daily tools. I look at the BTC CME charts. I look at total crypto cap. I look at the S&P 500. You can see that's down at the moment. NASDAQ is down. US 30 is down. Gold actually made a big dump today as well. So back to the Bitcoin chart, BTC USDT. So basically what I go and do is I always go on a monthly time frame first, because if we look at time frames, the longer term time frames, you are going to have a stronger chance of a support being held or a resistance being held if it's a monthly, a little bit less so if it's a weekly, a little bit less so than if it's a weekly. Now, I mainly use those three on my charts. Why? Because those kind of areas are very respected. Here and there, I'll go over to a 4-hour chart, maybe a 1-hour chart if price is ranging between a couple of key support areas. But what you can see, I normally use array, and I use a lot of templates and shortcuts. So basically what I'm looking for is a close on a bullish candle and an open of a bearish candle. So there you can see there's a level there. And if you go right through there, you can see the levels was what's actually touched there. So I'm going to go mark that level and just expand your chart a little bit more so you can get some accuracy on that. Actually, I'm just going to mark it right there. So I've already made my templates. So I'm going to right click, go to my template and mark it a monthly level. My monthly levels is purple. I got this from Daniel Chart Champions. He does his charts exactly the same for those of you that follow his videos. So generally, what I then do is to make my process easier, I don't go and draw the array again and then right click and copy. All I do is I go control and hold on that, and it duplicates that line basically there. So I'm going to keep duplicating, just copy onto those sections there. And these are the obvious ones. Obviously, when you start out charting, you want to do this roughly where you can see the levels. And when you go further, then you can then obviously take it to a lot more specifics. So I'm actually seeing that our history only goes to April 2020. So the levels below this is going to be hard to see. I'm going to actually go to the Btc Index, guys. Where are you? There's a Btc Index. So that Btc Index is going to give us, I'm going to actually switch off my previous levels that I've charted there. Okay, and those are switched off. Okay, so let me just quickly redo those levels. There's a monthly level. Okay, and control and drag. That one there. Control and drag. Chart that one there. Okay, so now we can actually see that we've got a history all the way to 2016, and if we zoom out right to the beginning of July 2010, and obviously on most of the exchanges we don't have data before 2018, 2020, so the index is good to use for the levels going way below where we are at the moment. So I'm going to copy that one. There's a possible level there. You can see it's touched on those candles there, got a wick there, wick. So that is a very, very strong support. Hopefully we don't go down to those levels. Okay, so there I can possibly mark the chart over there. Let's just do it for good measure. And that's basically my monthly levels, almost to a T. There's a monthly level there. And we have a monthly level just above that, right there. So once you start drilling down to your weekly and daily levels, you'll see how these monthly charts are respected. Because obviously on a monthly time frame, it constitutes 4 weeks. And here you can see there we've had a weekly close, open and close, open and close right on that level. So I'm not going to mark that weekly level because I've already marked it on the monthly. So what the intention is here is I want to go and mark the levels that are between these monthly levels, because obviously price doesn't go straight up from 69,000 all the way down to 45,000. It goes in a zigzag motion. So let me just right click and apply my weekly level template, and let's go have a look in between. There's a weekly level here right there, and you can actually see that it extends all the way there. So that's a very strong level there. And you can see in the last couple of weeks since the May the 9th drop, that support right there has acted as a resistance. So it flipped into resistance. So if we draw down to our 4-hour chart right here, let's just scroll like so. You can see this is the range that we were trading in, and there's our weekly, there's our weekly resistance level sitting at $31,700. You can remember that we were trading in this little parallel channel for quite a few weeks, right up until we broke the channel to the downside. Literally last night and that's where all the poo started hitting the fan, if you want to put it that way. Okay, so let's keep on looking for some more weekly levels. Let's expand that. Okay.
So it didn't even take you that long to map out all of those monthly levels.
It really doesn't. So literally, if I've got a coin that I see has been pumping, dumping, or whatever the case might be, I don't trade it until I go and map these levels, draw my fibs, do my value areas, and then I start looking at open interest and I start looking at order flow. Because then you've got an idea of, okay, am I at support, am I at resistance? Because looking at this here, we are, and you'll see once we go to the daily time frame here, if I remember correctly, we are at a daily support level. Yeah, right here. So there you can see, obviously, there's zero data here in terms of the price levels that we're at the moment. So we've got to look back on the history of what's happened. So always look left on your chart. That's a very, very good principle to live by. So there's multiple daily area touches. So I'm just going to map that roughly. Right click, template, and I'm going to mark a daily level. So there you can see my daily levels marked, and they've been sitting there on my daily, on my charts that I use to trade Bitcoin on daily, and you can see that we are hovering around that level. And right now, price is sitting, it's wicked down all the way down to 22,000, and right now it's sitting at that $23,700 area. So we are trying to reclaim that area, it seems, but yeah, a very, very volatile time to be trading. To be honest with you, my recommendation right now is if you're not an experienced trader, stay out the markets. Just wait until we can get some kind of stability in the market, because there's a lot of fear in the markets. And I'm going to show you exactly on the open interest chart today, the price action has been due to fear. People have been closing their long positions. It's not been because people have been opening shorts. Yes, people have been opening shorts, but there's been more closing of long positions from what I can see in open interest. So, and fear is really, really driving that sentiment. So there's another daily level there. You can see all the opens and closes. You try and get as many touches as you can. If you're not sure, what you can do is change your chart to a line chart. This will give you much more of an idea. There you can see I've had exact touches there, because sometimes with your candles, you can't exactly see, did it touch there, didn't it touch there? So if I go back to my line chart, I can see there's a touch, 2, 3, intersection there, and so on. Okay, back to my candle chart.
Sean, do you mind if we take just a minute to answer a few questions?
Yeah, sure, go for it.
Which is nice. We'll just drop a quick answer to each one. Choose the ones you'd like to answer. I'm just going to read through them. Okay. From Okuchukwu, are we going to see a bullish run this year?
That's a very good question. So here's my theory. With all of the FUD that the Fed has been creating, I really think that the Fed has crashed the markets intentionally. And there's a lot of articles that confirm that, even from December, when we had that huge drop in December this year. A lot of people were saying that, yeah, they're trying to save interest rates and they're trying to save the economy, blah, blah, this and that. But let me tell you something. I'm just going to go over to this chart. On Twitter, people were saying, is there anything that's green today? And I answered yes. Have a look at Tether. Tether is the only one that has been green today. Why is that? People are in fear. They're selling their crypto.
Everyone's buying Tether, yeah.
Well, they're selling into Tether. Because, I mean, most of these coins are BTC USDT. ETH USDT.
Which is exactly the same as just longing Tether, basically.
Exactly. So, and what do people do? They are scared. They take their fiat, or excuse me, their USDT, put it back into fiat, and that in turn strengthens the dollar. So for me, that was the Fed's intention the whole time.
That makes sense.
And so I'm going to answer your question. It's a bit of a long answer. So the Fed knows, and the US government knows, that there are elections coming later on in the year. Think about it this way. If there's a huge crash that happens in the beginning of the year, then what's going to happen? When election time comes and there's a recovery that has come, and you look at the history last year there was a huge dump in May, and it took us all the way to July. Okay, that's July 2021. Have a look here. This is where we dumped. 12th of May, we had a huge dump. 19th of May, where Bitcoin came and touched down to that $31,000 area. And look at that. Our weekly level that we marked, exactly those areas there. Then we had a run up, and we went to all-time highs in November. So traditionally, if you don't know, June is a very bearish month for crypto, and BTC in particular. So it's just kind of doing exactly what it should.
Isn't there a saying in Forex, something like go away in May and come back in August or something like that?
Oh, that's interesting. That's quite it. Yeah, that fits with the narrative that I think it works with quarters. In the third quarter, there's always like a kind of rally. So I think we're going to see some rallies closer to the election time. Why? Because the US government doesn't want the economy to be in a negative position before they go into an election, because why then would the people elect them? So to answer your question, yes, I think we will see some rallies later on in the year.
Yeah, no, I also think so. Later in the months, November, December, there's always some bullish movement. It's kind of also like the cycle. If you think about the moon cycle, in terms of new moon usually being like sell-offs, full moon usually being buying. It's the same kind of thing with a yearly cycle with the birth and the death.
Yeah.
But I do agree, and we'll just have to see where it goes. Okay, so so many questions here. From Jessica, it looks like you're using normal candles rather than Hike and Ashy. Do you have a preference?
So Hike and Ashy are really great for looking at what the trend, no, that's hollow candles. So seeing what the trend is. So, and Hike and Ashy will always give you a kind of when a trend reversal will be. So yeah, you can see this is just telling me that the trend is downward. And at the moment, so if I look on the daily, I really don't have much. Doesn't look like there's much chance of a reversal now. So if we go look on the 4 hour, okay, we've got a bit of a shortening candle there, so we could have a reversal there. Back down to the 1 hour.
For charting, you use the normal candle, but for trend analysis, you'll switch to Hike and Ashy.
I use them sometimes. If I can't see anything in the charts or in the order flow, then I'll switch to Hike and Ashy. And to be honest with you, I saw somebody asking about what's the best indicator for beginners. When you start out as a beginner, you want to learn. This is what I did. You want to learn about absolutely every single indicator, and what happens is you get a analysis by paralysis, or the other way around. You get so confused as to what the heck is happening in the chart that you can't actually see what's happening. So, I mean, the most indicators that I have is maybe an RSI, and I use an OBV, the CCI coded OBV sometimes, just literally to look for divergence. But most of the time, I use divergence as a confirmation, not as a trade entry. So these days, I'm literally just using the levels, I'm using the Fibs, I'm using the value areas, and the TPO and order flow.
Okay, perfect. All right, so one more question before we move on. I think this is a really brilliant question from Davy Jones. Which is better and more rewarding, trading with high leverage and low margin, or low leverage and high margin?
Low leverage. So what was that? Low leverage, high margin?
So
or
basically,
high leverage, low margin.
Yeah, so like taking $5 on 100x, or rather taking $50 on a 5x.
So here's the thing. It really depends on your risk management. Whether I'm taking I like to trade on 10x. Why? Because it's easy to work out the position sizes and everything else. Once I'm in the trade, yeah, exactly. It's just easy for me to work out. So I literally don't change my trade sizes, whether I'm trading 1x, 5x, 10x, 100x. Why is that? Is because what you're willing to risk it stays the same. So let's say, for instance, okay, let's say I take a long position here, okay, and my target is up there. Let's say I'm going to put my stop below this $19,000 area. So I can say, okay, that's a very big stop. I actually wouldn't do a trade like that. I mean, I like to maybe, let's say we risk about 4%. Okay, let's say I can't get it exactly on 4%. So, and this is actually in my little cheat sheet here. So I've got a trade size and a risk calculator. So if I've got $1,000 account and I risk 1% of my portfolio with each trade, that means when it goes to stop loss, I'm risking $10 per trade. Okay, so, and this stays the same for every single trade. Okay, so that means what I've got to work out my trade amount, I've got to take my dollar risk, which is $10, divided by my stop loss divided by 100. So we said my stop loss is 4%. So if I am going to trade Bitcoin, if we come back to the screen, you can see my stop loss, okay, 4% there, and my risk to reward ratio is a 5.91. Then basically to work out my trade size, that if the price retraces to 21,868, I know that I'm going to lose $10. Okay, so coming back to this screen and my calculator. So I'm going to take $10 divided by, 4% divided by 100 is 0.04, so 0.04. That's what my trade size should be, $250. So whether I use, if I use 1x, then my order cost is going to be $250. If I use 10x, my order cost is going to be $25. So that's the way that I work it out. So
that's brilliant. Thank you for sharing. Yeah. That's awesome.
So, you know, if you think that the trade is gonna go really go your way, you know, maybe risk 2%. Don't risk more than 5% ever. Because if you think about it, if you're risking 20%, 30%, 40% of your capital every single trade, and you lose 5 trades, you just have to risk 20% of 5 trades, and you're wrecked. So whereas
you really have to find the balance that works for you. Because if a trade doesn't go your way, you're going to say, oh, I wish I put less in. If it does go your way, you're always going to say, oh, I wish I put more in. So it's the equilibrium. What suits you.
Let me ask this question. If, okay, I was going to talk about this in the end, but I think it's important to cover this kind of thing because I showed you this compound interest calculator.
Yeah, I've been thinking a lot about
this. I'm going to start this on $100. Okay, let's say we win 2% every day. So let me ask you this, without looking at that spreadsheet: if I risk, if I am looking for a bit trade where I'm going to make 50% on a trade, that means my risk is the same as what my reward is going to be. But if I risk a small amount of my capital, see, most people will want to do one huge trade of a 50% gain. They don't look for the little 2% gains per day. And look at this. If I start on $100 and I make 2% a day, so on the first day you're making $2. That seems like nothing. But look at this. Every single day, if you make 2% and you keep your risk management really, really down to a T, look what it turns into in 364 days.
Over
$100, well, it's 133,250. So,
what was your other one that you used?
That was
$400. Okay.
That was $400. So if I start on $400,
I must say, from observing the copy traders, this really makes sense. Watching the copy traders who are doing well, They're all just banking literally 4%, 2%,
banking profits. And
6%,
look at
banking, compounding.
Exactly. You look at all the guys, Carl's, I know, he likes to book profits. Van, Trader John's, he likes to book profits. You know, and I know a lot of guys say, you know, beginners let their losses run and they don't let their winners, they close their winners too early. You don't know how many times I've opened a trade and not taken profit and think, no, I need more profit. The trade literally is as if it's heard me. It price reverses and goes way, way down beyond my stop loss.
And that's greed. Greed is a killer.
It really is. So for me, my strategy has been over the last while to take profits. And I've got this thing where, like, especially now, if you're going to trade, do what I call a zero risk trade. So in other words, if my entry is here and I see price moving up there, move your stop loss up. Move your stop loss up into profit. So that if price comes down and it hits 19,000, you haven't lost anything. In fact, you've gained a little. You know what I'm saying?
Yeah, it's all about getting that win rate up, losing trades down. So if you can win a trade, just win it, take it. Just one question here I thought was quite interesting before we move on. We'll do more AMAs at the end, but this is from Raj. He says, what about the new coins which go below their listing price? How can you draw these levels? I've often thought about this. It's very hard to map the lower levels of coins that have, you know, it's actually price discovery happening at those lower levels, even though it's lower price discovery.
So, yeah, it's a very difficult thing. Where's one of those coins? I was trading it the other day.
I think it was below its listing or something.
Here we go. This one. I was trading this the other day, and there you can see all my levels on the chart, and that's where all the levels ended. I couldn't find any other exchange except Gate.io that had history. Well, yeah, this was the one that had the most history. So you can see it started out. So you literally in the dark. If you've got no history to look for, you've got to literally wait for price to go and do its thing to create the levels. And here we can see I can now go and chart some levels here. There's a daily level there. Okay, not quite exact. There's a daily level there. So, and as these daily candles close and open, then I can possibly have a daily level there. Then if I go down to my 4-hour period, I can see if price comes back into this little area, if there is a retest and we see price come up and hold there, I can take a long there and possibly take profit there. So yeah, with the new coins, there's just no other way around it.
Interesting. Awesome. Thank you, Sean.
Okay, cool. So actually, just to expand on that a little bit, the only other way that you can do it is to go down to 4-hour, 1 hour, 15 minute, because you're gonna find some levels there. I mean, for instance, drawing parallel channels, we can see now we are trading in this little channel here, and this is on the 15 minute. Excuse me. We had another little channel here. We had another channel right there. You know, so
basically you have
trade the ranges.
More on your indicators, more on your ranges, more on your TA, because yeah, you're in the dark. You don't have any historical volume to help you with your support and resistance levels.
Exactly.
Awesome.
So literally, I guess if Bitcoin stays in this range for a while, then I could short there and long there. So what a lot of guys do is they see price breaking out and they start longing into resistance. And what we should be doing is the opposite way around. Okay, cool. And looks like we're getting a little...
I think, yeah, let's push through our tutorial because I'm very excited what you have to hear. And then, yeah, there are just so many awesome questions. So we will take some time at the end to go through the questions. And yeah, what a beautiful turnout. Thank you so much, everyone, for joining. The new faces, the regulars,
awesome, thanks for joining and thanks for watching. So the second thing that I go and draw on my chart is I go and look at the value areas. So value areas, and by the way, I am on a free TradingView account. So everything that I can do, if you don't have a paid account, you can do on TradingView. So literally what we go and do, where's my, I put shortcuts for all of my things. So I can't even remember where it is on the chart. Oh, there's your fixed range. So if you go where your long, short positions and that kind of thing are, so I go and favorite them, so I don't have to go and look for them every single time because it just wastes time. So you just click your favorite button. As you can see, that added it to your favorites bar. So I'm going to remove that one. And I know that my fixed range. So let's go and have a look at what the fixed range is for, because we had that range from the 9th of May. When we dropped down below 31,000. And of course, we had the range break over there. So have a look here. I'm going to pull my fixed range, starting there, and I'm going to pull it to there. Just got to give it a few seconds to. Why are you not doing what you should do? It's not actually pulling my range. Sorry guys, I don't know what's happening with my chart. Let me just delete it and retry that again. Let's try it on the daily. That is really weird. Sorry guys, for some reason it is not pulling my fixed range. Let me just try on another chart real quick.
Have you got that right, the indicator?
Definitely. Go to the Bybit chart. As I know, I've got fixed ranges that I've pulled there. Let me just switch off those levels, switch those off, that and that. Okay, go to the 4 hour there. Okay, and yeah, that's my fixed range to there. There we go. Okay, maybe it's because I was pulling it on the index chart. So you can see that we had our little range here, or our channel that we were trading in here. So, and if you pull the fixed range, the value area high is this blue line, value area low is that blue line. So here you can see where 70% of the trades have taken place. You can see by this blue and the yellow. The POC is the point of control. In other words, that's the fairest price that Bitcoin has traded in between the 10th of May and the 10th of June, 2022, because I've only pulled it to there. So what I go and do, I go and mark those levels. First, I mark my POC, and you can change the colors, and you can go put text in there, whatever you want. But to shorten the process, I like to make my POC in a red, and I've made a template for it. And what I'm going to do is mark the value area high and change that. There it is. And I'm going to mark the value area low. Right there. So the importance of this, and I can go and switch off my fixed range, and there I can see where my value area high is and my value area low. So I was trading this range up until it broke. So if this range now had broken the value area low, which it does, that meant that there's a new range. This range has now become invalid. If we had broken up above and reclaimed this value area high here, then we could have possibly seen it retest there and go up a little bit higher. Now, if I go and turn on my levels, where are you? There you can see it kind of corresponds. If I pull this fixed range further back, I know my value area high was around this weekly level. And you can see that I marked that 4-hour market structure because price had been making lower highs and lower lows all the way down from the high of 69,000. Here you can see, and I'll draw it here. There we go. So lower low, lower high, because there's the previous high, there's the previous low. Lower low, lower high, lower lows, and then we started ranging here. So if we'd reclaimed this, we would have broken that previous high, I suppose, and made a higher high. But obviously that didn't happen in the market, and we broke down. So as you start trading more and more and looking at more of these things, you'll start seeing how important market structure is, these value areas and these ranges. So what's important to note about this POC is that even on a daily chart, the likelihood of price going back to the POC is very, very high if the POC stays the same. So we can actually just drill down, and you're going to see how this is important with the TPO charts as well. The POC is a huge, huge factor in TPO charts. So let's pull another one there. And you can see, if you look down below, 12th of June, 2300. So that was probably the open of the day. So if I draw that POC, that there, we can actually see. And you could have traded this exactly just on the fixed range and the levels. So again, here's my levels. We broke down below that level. We went down to the value area low of the day in the blue. And look at this. Price came back up to the POC. So price is going to be drawn to that POC because that has been the fairest price for the coin traded for the day. And I pulled it from last night, 10:30 South African time. So that's the fairest price. And remember, price is always going to be drawn towards the most liquidity in the market. And so I see Steve's asking, how did I draw the fixed range? Very, very easy, Steve. You just literally click on that. One click from where you want to start, drag the mouse, and the second click where you want to end. And then it pulls it for itself. So just practice with that. You'll be able to get it right. So what's going to happen in this little range? Nothing is going to happen with price. We're not going to reach these levels unless we reclaim this value area high. Because you can see this is where 70% of the volume has been traded for the day. So those are my value areas. I go and mark them because I look out for, and I haven't actually pulled value areas. Let me switch off my levels here. Turn on these latest value areas here. There, and there. And you can see we've broken those. So I'm going to have to repull this value area because the POC has changed, and I will look for the value area low to start being reclaimed for bullishness. So as I said, I'm actually going to stay out of trading for the next couple of days unless I see a really, really juicy trade come my way. So next thing that I pull on my charts is I go and look at my fib levels. So I'm going to go back to this index because okay, let's just group these together so that the chart isn't. So I hold down my control key and select all of those, right click and create a group of drawings, and I'm going to call those my levels. And with one click, I can literally switch off all the levels and switch on all the levels so that your chart doesn't get too messy. Because once you start doing a lot of these levels and getting down to the 4 hour, it can get very, very confusing. So let me go switch that off. I see the question, where did I start learning this indicator in the early days of your trading? I didn't learn it in the early days of trading. I started seeing guys use it, guys that were having success, and I thought, let me start learning how to do this. And there's not a lot of information out, but you can find the information as you go. And I literally started learning by trial and error.
Okay, these kinds of communities are so awesome because everything's there.
Exactly. Absolutely. And we can learn from each other. You know, what my strength is maybe somebody else's weakness. And I've got weaknesses that I see guys like Bitman and Cals and yourself, George, you guys have strengths in other areas, you know. So, yeah, there's certain indicators that guys trade with, like, how do you do that? So
I'm just thinking, Sean, this is so awesome. So don't rush. Take your time. I know we're not getting through all of the content and we're running through time, but I think this is so informative. Yes. It's not a big deal to me if we're going to maybe even bring you back on Wednesday or next week to do the order flow, because I mean, we're all learning so much. So just take your time, answer the questions.
Okay.
Thank you.
I'd actually prefer that, because then I don't
no, you don't want to squeeze it in.
Absolutely.
Awesome.
Yeah. I see Kundan. I just want to answer this question. When do you expect BTC back to 65K, or can we never see BTC back again 65K? What is my thought? So if I knew when BTC is going to go back to 65K, I would be a millionaire. I wish I knew. But I do think that we are going to start seeing some bullishness. Remember that we have a halving taking place in 2024. So for me, I've started now to start accumulating Bitcoin, and you can do that by trading BTC USD. In other words, you hold BTC, and when you trade and you win a trade, you actually get paid in BTC and not USDT. So I'm accumulating that. I was accumulating ETH, but I actually sold all of my ETH a couple of weeks ago because I thought this is just going nowhere. And most of my funds is now in USDT, doing leverage trades. I'm accumulating USDT, and I'm accumulating BTC USD. So I think,
just to confirm that everyone gets it, it's very important. If you're looking to accumulate Bitcoin, you can trade inverse perpetual so that you're actually using Bitcoin as your margin. Then when you take your profits at lower, like that trade I just posted on the group, the 5x from 28,000. When I take my profits, I'm looking to take my profits at 19,000 and then go long. When I take them, I'm going to be given my profits in Bitcoin at a much lower price. So yeah, we can all understand that it's a good strategy. So just to clarify and make sure everyone understands, to trade when you're trading in a bull run, it might be better to trade with USDT as your margin if you're looking to build up your USDT by taking profits through the bull run. I hope that makes sense.
Yeah, absolutely. And there's quite a few inverse perpetual contracts on Bybit. And there's ETH, there's Sol, there's I think there was DOT, EOS. There's a couple of them. Okay, so the next thing that we're going to do is we're going to pull Fibonacci's. So your Fibs are sitting. Where are your Fibs? Right at the top. Like I said, I forget because I make them as favorites. So you click on your Fib retracement. Mine is not a standard Fib. I've just changed it to see where the golden pocket is, and I'll go and show you quickly how to see that. I'm going to go through it quickly so you can review the video again and go through the settings, pause it, and you can do the same settings if you want. So, but I'm going to pull a Fib kind of from the top of this drop that we have here to see where we could have some reversal areas once we have a price reversal. So if price starts bouncing off this area here, we could see a move all the way up to what we call the golden pocket. So that's the 0.618 and 0.66 Fib. And if I go and click on this Fib retracement, I can go to my settings, and you can actually go and select which Fib levels you want to see on your chart. So I could actually take all of those out and just put in the golden pocket area. So that area is a 0.618, and I've gone and put in that 0.66, and I've made the colors a orange and a green so that I can see it absolutely clearly when I pull it. So, but I like to leave these levels in because have a look here. That 0.23 Fib is going to act it as a support. That 0.382 was a resistance. And the same as if I go and turn on some of these levels again, you can see they correspond exactly with these levels. And I didn't plan to pull this Fib, so I didn't know. But this is the incredible thing about Fibonacci, that it just occurs over and over in nature. And for some reason, it's extremely accurate in trading as well. So
what's important there, I think, is that those levels will have extra significance if you see Fibs there, because it means that more traders are going to actually be trading on those historic support levels.
And why these levels are so respected is a lot of traders use Fibs and a lot of bots use Fibs as well. So, for example, this little wick to 25,000. I was wondering the other day, why on earth 26,000? Because if I turn on levels, there's almost zero support there. Okay, there's a maybe one daily wick here. So if I go to it, there's a daily wick there. But that wasn't reason enough for me to establish why price went down to this level. And you can actually see that it came a little bit further down. And I thought, let me pull a fib. And where is the low? Remember the coronavirus crash and the rally up from the coronavirus news? Let's just pull a fib from there. So select my fib there, right from the bottom. So if you're looking for support, you pull from the bottom to the top, always from left to right. If you're looking for resistance areas, you pull from the top to the bottom. Okay, so I'm going to pull from the bottom there all the way to the all-time high. And would you look at that? Let me turn off these levels. Surprise, surprise, that $26,000 area, where did it bounce? Right on that 0.66 fib. So, and I actually did this in one of my videos today, in the TO video that I spoke about for possible reversal areas. I'm going to put this chart onto a monthly chart. And if I zoom in all the way to the start, August 2010, where Bitcoin started out at 1 cent. So it's not going to be exact because I haven't actually zoomed in all the way, but it's going to take a while to zoom in. So if I pull a fib, okay, so it's starting from $33 all the way to the all-time high. Look where we are right now in terms of the price. So I was saying in my video,
members are wondering, Sean, what is the golden pocket from Crypto Cloud and Okuchukwu?
The golden pocket, yeah, that's that's a whole 2 or 3 sessions on its own. So if you look at, if you're going to look, so do yourself a favor, go and Google Fibonacci retracements. So oh, there we go, the golden ratio. Maybe I'll put this into the document. Investopedia is awesome. So there's a unique ratio that can be used to describe the proportions of everything from nature's smallest building blocks, such as atoms, to the most advanced patterns in the universe, like the unimaginably largest celestial bodies. Nature relies on this innate proportion to maintain balance, but the financial markets also seem to conform to this golden ratio. So there's the mathematics and everything is there. And it talks about that a guy called Leonardo Fibonacci discovered it, that it occurs from everything to if you measure the length of your nose in proportion to something else. It's all in the document. Even sunflowers. Take honeybees, for example. If you divide the female bees by the male bees in any given hive, you'll get a 1.618 ratio. Sunflowers, which have opposing spiral seeds, have a 1.618 ratio between the diameters of each rotation. The same ratio can be seen in relationship between different components through nature. And it just is absolutely endless. So
if I'm correct, the golden pocket is the main reversal point.
Correct.
Okay.
So if we look at, I'm a photographer. If we look at a photo, there's a ratio that works in terms of the 2/3. If you look at this screen, for example, I'm just going to pull a little, let me do this. I'm going to do that. So in terms of a photo, the best way that you can take a photo, excuse me, didn't want to stop there. The best way that you can take a photo is to frame it within the last 2/3 of the screen. So if you imagine that could be across, that could be across there. Aesthetically, that's where you want to put your subject, and that is a Fibonacci ratio. So it just occurs over and over. So do yourself a favor, go and Google Fibonacci ratios and Fibonacci extensions. It's fascinating, absolutely fascinating. Yeah, so I go and draw my Fibonacci levels. And for me, this is a reversal area. But does it mean that I'm going to go absolutely bonkers and put all of my capital into this trade because I think there's going to be a reversal area here. Absolutely not. That's why you've got to look at open interest, you've got to look at volume, you've got to look at order flow and see if there's actually a reversal happening here. So for me, I wouldn't go balls to the wall over here unless some of these levels are reclaimed. So you can see there's my daily level in blue, and there's the lower end of that Fibonacci ratio. Until this actually gets retested as support, then I wouldn't believe that this level is going to hold. Because you can see here, below this, we've got a weekly level at 19,000. We've got another level at 16. We've got another level at 13,000. And going down even lower, 11, and I know there's a level at 9. So it's possible that we can get wicks down all the way to the $19,000 area. But yeah, just look for my YouTube channel, Czar Trader Guy. I posted a video even on TradingView on why I think that the bottom is quite near. Yeah, I think we are quite close. If we can get a little bit of a relief rally, then and we can reclaim this $26,000, then great. So yeah, coming back to my little cheat sheet, actually before I forget, I'm going to copy this link for you guys so you can go read up about that, and maybe we can make this document available on the group, George.
Yeah, that would be awesome.
Cool. What I can even do is I'll put it on Google Drive, and you can just put a link if that's easier for you. Just let me know.
Okay, great.
Okay, cool. So
cool. So we have 5 minutes left. I'm not sure if you'd like to take 2 more questions, or would you like to?
Yeah.
I think, according to your availability, we either would love to have you back, obviously, on Wednesday or next week, Monday, depending on when you're available. But I think the order flow stuff, I mean, I'm so excited about it. I know all these AMA questions about order flow tools. I think you're going to teach us a lot. So you'll let us know when you're able to come back.
Cool. I'll confirm with you. Yeah, the open interest it's absolutely fascinating, and so's the order flow. I mean, just to give you a little bit of an insight, I use order flow software called Atas. It's free. You've got a 2-week period after you register, where you can get crypto stocks and everything for free. And after 2 weeks, your license expires, but the crypto stays free. So I'm paying absolutely zero for the software.
That's awesome.
So, and what you're going to do is look for an imbalance chart. You go and look for your instrument. Let's take ETH USD, and we don't want that exchange. We want this exchange here. And what it does, generally, you divide your candles into a 30-minute chart. I've selected a 30-minute time frame by default. And as you can see, I can see exactly right into that 30-minute candle. You can see these on the right are buys, these are sells, and the imbalance that is caused, here you can see there's something called delta, and the delta at the moment is positive. Although if I look at the volume is not huge on ETH. I should actually probably be looking at ETH USD because there's a lot more volume there.
I think that definitely deserves a full session. I mean, for someone who hasn't been working with order flow, well, you're going to have to take us through it very slowly.
Absolutely. And even though I've been using it for a while, I'm really still learning. I think with trading, especially in life, you've got to be a continual learner. If you stop learning, then there's a problem. So no, exactly. I can see here that basically all of the reds are shorts in the candle. So whereas on a normal candle chart, I can't see where the longs are. I can't see where the shorts are. All you can see is a candle. I can drill down to a 3-minute, but I still don't know whether the buys, sells, are the buys or the sells more. What is the story? And right here,
and the order book is not as visual. It's not as easy to actually see. And obviously that order book is only for your exchange that you're trading on.
Exactly. Well, yeah, this is also exchange. So if I want to look at different exchanges and there's a higher volume on a different exchange, I can open up multiple exchanges. So on the software, and then what you do is you just put them right next to each other. There can watch ETH USD, and I've got my BTC USD. So if I'm trading both, I can look at both. So what I do is I swap between my order flow, I swap between my open interest charts, I swap between the candles, and obviously it helps if I've got two screens. So I put one section, my charts on my right-hand screen, I put my order flow on the left-hand screen, and then I go and look at my although this can actually show you open interest, there is a better place to see open interest, and we'll explain that and get into it as we go. So just to quickly, as a precursor for the next session, your delta here is the buy trades, which is the ask trades here, and the bids, which is the sells, and it calculates the difference for us. So as you can see at the moment, we've got some negative delta happening, which means the sells are outstripping the buys, and you use this in conjunction with your levels, with your Fibonacci, with your market structure, with your open interest. And as it starts coming together, you say, this is bullish. You take the trade. This is bearish. You take the trade, although I wouldn't short at this point because it's at a major support level. It doesn't mean that we're not going to see lower. But what it also does is it gives you the ability to actually see where, for instance, now I can see exactly here if I put
it's almost like an X
together.
You see the bones of the candles, what's actually happening, like an X-ray.
Exactly. So where the price is at right now, that's where price is at. All of these short trades at the moment are underwater. So what does that make you think? Where are their stops?
If they get liquidated, they want more.
Where are their stops? So here's, TPO will come into that, but let's open up a 30-minute chart on the BTC USD chart. I can bet you that the stops are going to be here. So if I took a short and I thought it was a high risk trade, I'll put my stops there. The guys that have been shorting here are going to put their stops there. The guys that shorted here are going to put their stops there. So if price all of a sudden starts pushing through here, what's going to happen to the shorts that opened in this area? They're going to get liquidated. And when they get liquidated, what happens? They re-enter the market. So a short, when it closes, re-enters the market as a long. So what's going to happen? It's going to push the price even further. So if all those shorts that opened up here are seeing that longs, that opened up here, seeing that the market is now going long, they're going to get into fear, start closing the shorts. And if it hits this area, even more shorts are going to close and start pushing the price further up. So if we get to these areas and we don't see price moving through it, then we know that that the sellers have absorbed that liquidity. So you got to remember that a market is literally, it's a two-way auction process. So the buyers are looking for liquidity to buy or coins to buy. The sellers are looking to sell to the buyers. And what we've got to realize is that that process of buying and selling and the price is literally just an advertising mechanism. But we'll get into that as we get into the next sessions.
Very, very interesting. Sure. So we have run through our time. It would be awesome, I think, if you could just take one more question. Very short answer here. This is from Kundan. How much weightage should we give to market news over indicators for predicting market behavior?
To be honest with you, I used to read the news every single day. And I started trading what I thought would be a reaction to news, and I lost money. So I don't read the news at all anymore. I literally just look at the charts. If If I've looked at the charts and traded, I'll go look at some news. But I just want to show you this for interest sake. You know, there's always going to be a negative sentiment in the news. And look at this here. This is the open interest. This is what I was telling you guys about this whole drop here that happened from 28,100 from yesterday, 4 o'clock UTC, all the way down here. Look at this. This open interest dropped rapidly. So open interest is the amount of contracts that get opened or closed in the market in terms of leverage trades. If these were shorts opening, this open interest actually should have been rising. So this tells me that this price action going down here were actually longs closing and not necessarily a big amount of shorts that were opening. So that tells me that there's extreme fear in the market. People saw the price going down. They closed their longs. Why? Because of all the FUD and the news and everything. And I'm not saying that the news isn't relevant. Of course, the interest rate hike by the Fed a couple of days ago did have a reaction on the markets. But yeah, really, I really don't look at news so much anymore in terms of trading. So
basically,
I have it in
another
the back
reason
of my mind.
to take open interest into account, rather look at open interest in news.
Absolutely. So what I would look for here is a rapid, and I wouldn't look at it on the 1 hour. I'd look at it maybe on a 15-minute chart. And coinalyze.net, you go to so if you search for BTC USD,
Coinalyze is awesome.
It's incredible. You can actually see a lot more on Coinalyze, and it's a free thing as well. So you just select your perp or perpetual Bybit, because the perp contracts are the ones that have the open interest charts.
Okay.
So what I would look for here is comparing it with my levels that it's at. Maybe if it comes down to this $22,700 area, and swap over to my Coinalyze chart, look on a 5-minute. I sometimes even drill down to a 1 minute, and I would look for a quick change in open interest here. So as we get a green little candle up here, I will go and look at the order flow. What's the delta doing? Okay, it's still in negative delta. If we look at this, the volumes going in here, we had huge volumes, 51 million, 74 million, 161 million. And all of a sudden we had a 6 million positive delta, and you saw the candle that went up there. 135 million, 266 million, but we had negative delta. And also you can see here, this is also my open interest. The open interest dropped. That means that longs were closing, and they were re-entering the market as shorts. So it's all about, open interest is all about longs closing, shorts closing, looking at the trend, and seeing whether new money is coming into the market. Because if new money is coming into the market, that's when you know that there's a strong trend. So for me, the fact that longs are closing means that we possibly could have a trend reversal here. But you've got to really, really watch. So, yeah, guys, my recommendation is just take some time to educate yourself in this time. You really don't have to trade, because the issue is that these markets are designed to wreck people like you and me. We don't have a lot of liquidity. We don't have the money and the capital to move the markets like the big institutional buyers and sellers. So, keep your money safe. I would wait until we can establish a little bit of a trend. We might even start trading between these two levels here, and then take the short there if you see a confirmation. Take a long there if you see a confirmation, although it's a very, very small kind of trading range. Yeah.
Awesome.
That helps.
Sure. Yeah, I've even got so many questions I want to ask you now. But I think, let's definitely call it. Thank you, everybody. And thank you, Sean. I mean, that was just, I learned a lot. So,
awesome.
So much gratitude. And then just so everybody's aware. Yeah, no, sure. And I'm sure we're all very excited to have you back. And we'll just take it slow. I think it's much better than trying to, rush information.
Awesome.
And you know, when you're hearing this stuff for the first time, you kind of have to hear everything twice and then still go back and do your own research.
Exactly.
But yeah, it's been brilliant. Thank you. So much
quite
appreciated.
Right, because the first time I started seeing these things, it really didn't make sense. And then I had to sit with the charts, and that's why I like to type things out. I like to see, okay,
I see that.
If A, then B. It's like a chess game or like programming. If your opponent does a move with a pawn, what are you going to do to protect your knight type of thing? And it's exactly the same thing in trading. So that we need to learn to think in the way that if price comes to there and open interest does this and it does that, then what? But if price comes down to this area, what am I going to do? So you've got to always have your scenarios prepared before you even consider entering the trade.
Sure. Thank you, Sean.
Awesome.
Incredible session. Wow. So much info. Yeah. And thank you everybody for being here. Can I just remind us all that we are gearing up for the World Series of Trading? So I hope you're all organizing into teams, setting up your squad leaders, setting up your strategies. Please do drop in my group at any time, any questions you might have with regards to the rules or any kinds of conditions for sign up. This is one of the most exciting times of the year for Bybit. So much to be involved in. And even if you're just participating from the sidelines, there are ways to get involved. So please do let me know if you have any questions. I will be doing a session on it. And then keep your eyes peeled on the group to see when Sean will be back, and we'll have the rest of the session.
Awesome. So guys, just a quick little plug. If you want to, I'm doing a lot of daily updates and stuff. Have a look for Zartrader guy on YouTube. And yeah, I do kind of like little TA sessions and stuff. But thanks for watching, guys.
Daily updates are amazing. I must say, the daily updates, not financial advice, but you could literally just go make trades on Sean's daily videos. Like, it's that simple.
Yeah, NFA, guys. Do your own research, NFA.
All right. Thanks, Sean. You're a rock star. Thanks, you, everybody. Guys. Please do trade with care. Don't get wrecked. Absolutely. Have a wonderful evening further. Guys. Lots of love.
Be safe. Be warm. God bless, guys. Chat soon.
Thanks, Sean.
Ciao, ciao.